Let's welcome in our next guest, Repco Home Finance Limited. The management now joins us on a phone line, Mr. V. Raghu, ED at Repco Home Finance. Sir, if you could just first start by the 7th Pay Commission and what sort of an impact do you believe it will have on your company, because your ticket size is quite lower. That's where you expect demand pickup?
Definitely. I think the pay revision by the 7th Pay Commission, which is probably around 23.5% on a gross scale, is going to help the borrowers to have more disposable income in their hands, which probably could help them serve the EMIs a bit more easier than what they have been doing in the past. And especially, the provision that the minimum pay to be increased from 7,000 per month to 18,000 per month probably help those people in that segment to convert their dream into reality, because they will have more income. Though I personally believe that this could have a delayed effect on the housing finance industry, because most of the time the increase in the income, while it may help them serve the EMI on time, they are constrained to bring in that lump sum money as margin. So we believe that probably the arrears payment by the government to them could help them to bring that margin money. That's why we believe that could have a lagged effect. But this is definitely a welcome step, because once the public sector, the pay is being revised, it will be followed by the state government for the state government employees, and also it will have the triple effect on the private sector employees. So definitely this will be a boost to the housing finance industry, and for companies like us who have an average ticket size of still less than 1.5 million.
Right. As far as the overall demand is concerned, you were already growing at 15-20% plus. Do you expect that number to be higher next year because of the pay commission?
We believe that, we have been growing around till about 28-30% till the last financial year, and we still believe that about 25% growth should be feasible in the coming years. And this measures by the government should also help in reaching those levels.
Right. As far as the margins are concerned, do you believe that, with the low ticket size being there, asset quality being on the lower side, overall, do you think that margins would tend to come down because now the competition is increasing in the housing finance space?
Yes, the competition is increasing. Probably, the margin should remain more or less stable. That's what we believe, because since, on the one hand, the cost of funds are also coming down, and, the lending rates, yields also, because of the competitive pressure, there could be, effect on that also. But since we have been maintaining a spread of around 3% over the last 3-4 years, we believe that the margins could be stable in the current year.
So, one would imagine that you are in a slightly more risky area because segment of the market, because I understand that a majority of your loans are given to people who do not have salaries. They are self-financing. How do you manage to keep it still slightly low risk?
See, I think probably the risk that everybody is talking about is a perceived risk of lending to the self-employed segment. Mm-hmm. Now, this company has been lending to the self-employed segment for the last 16 years now. And yes, we have found that as long as you're able to underwrite the loans very clearly at the beginning, you can definitely manage that risk.
So how do you go about doing that?
Well, I think you have to estimate the cash flows of the borrowers, since they don't have any other statistical proof or a documented proof like their they don't have a regular income, or they don't have certified balance sheet. I think one has to have patience to construct the balance sheet and then arrive at what is their disposable income, which could probably serve as an EMI, and then you have to do that.
As you were mentioning, for the last 16 years you've done it, and your focus, of course, is in the southern states. We've seen significant growth in that, the self-employed space in the southern states in the previous decade, which is slightly slowing down now if one looks at the kind of income generation and the SME sector in that in much of the south. Now, how do you diversify? How do you keep growing?
See, basically, we are looking at those people who are, the retail traders. We are not, looking at those SME funding or something like that.
Okay.
So I think, and most of my borrowers, they believe in cash business. That's the reason why we have been able to maintain that asset quality.
No, so that's precisely what I'm saying. I'm asking you that even if I'm taking SME as a proxy for the growth, because if SME is falling, one would assume that even small retail, small service owners are also facing a bit of contraction right now in the last 2 years. Are you facing that in the southern market? Are you seeing that this is have to mean expanding into other markets more aggressively?
I don't think so.
Okay.
We have been having a fairly good experience with these borrowers. As I told you, majority of my borrowers are all into selling of essential goods, the demand for which will never die down. I think that demand will keep on going only, and that's the reason why we are able to maintain this.
So
we don't find any reason for diversification as of now.
Okay. So more than 2/3 or about 2/3 is just Tamil Nadu, sir?
Yeah, we have about 63% of the business coming in from Tamil Nadu. You are right.
But I remember speaking to you about, I would say more than a year ago, and you had told us that you're planning to expand in West Bengal, Orissa. How far have those plans gone?
We already have a couple of branches in West Bengal and Odisha. We have also expanded in Maharashtra and Gujarat, and in Madhya Pradesh we are trying to expand. And I think slowly we will expand into the other segment also. But as long as there is a good business available in the existing market, we'd like to capture that business.
And you, obviously these are for smaller homes, right? Smaller ticket size homes.
Right.
Again, the South was essentially the place which held out in the real estate and housing market. Especially if one looked at Bangalore, much of the Tamil Nadu tier 2 and tier 3 cities. Again, now in the last quarter, we are hearing that market has slowed down a little bit, and the northern market is again picking up gradually after a long pause. But is your ground level information similar, or you think that this is overplayed?
I think it's overplayed. I think we still believe that the ground reality in the southern market, where we have been having quite a bit of share, the market is still growing at a steady pace, and we'll still have a lot of business opportunities there. And secondly, as far as the information which we have, I think as per the estimates, 40% of the demand for housing or for housing costing up to 50 lakhs of rupees in the country, whether it is southern or northern region. I think that market is probably, accounting for a majority of the requirement of houses. And with a lot of positive things that has been happening for the housing sector, which is going to have an indirect effect on the housing finance industry. I think we believe that, the prospect for the housing finance industry is quite good in the coming year.
And again, when we spoke to you last, you were saying that you're trying to reduce your cost of funds by reducing the amount of dependence that you had on banks for providing the funds. What is the latest figure, sir? I think during your previous quarter, you had gone down to almost 94%. Has it reduced any further?
I think our bank borrowings have always been in the range of between 60 to 70%.
Okay.
So we also, depending on the market condition, we'll switch between, a year back I said we will reduce our dependency on the banks and then try to raise more money through the money market instrument or the capital market instrument, that is through the bond route. We are still diversifying, and as long as this whichever is beneficial, we try to tap that market. Because today the differential between the borrowings from the banks and the bond market, the interest rate differential is very low. And we still have, better dealing with the banks because we have access to long-term funds, that is for a period of 10 years, whereas the bond market funds are for a shorter period of 3 to 5 years. So I think for a housing finance company, borrowings from the banks for a longer period is more advantageous, but at the same time, depending on the differential in the market, we'd like to approach the market accordingly.